Massively important announcement. In the last 13 years, 11 months, and 10 days, silver prices have risen to an all-time high. Nevertheless, according to a couple of additional metrics, it has achieved record highs. And I don't just mean in the last 2000 years. I will demonstrate that to you at a later time. But you know what? I've always predicted that silver will skyrocket due to monetary demand. And silver will reach triple digits, likely reaching the mid-teens. It appears as though that demand is occurring at this very moment. Silver seems to be being remonetized by central banks. Anyway, let's dive right in. Get gold back on track first. Silver purchased by the Saudi Central Bank, a game changer. For 50 years, the only asset that central banks had was gold. Last year, Russia defied that trend by purchasing silver. I know you didn't believe me, but look at this. It's time to move on. Silver is being remonetized. Hansa Cherny noticed that the silver spot price is higher than the silver futures price on the same day. Typically, we're in a state known as contango, where buyers pay more now for the promise of future delivery of silver. Backwardation occurs when the price of silver in the market today, spot, is higher than the price of silver contracts for future delivery. That signal is both rare and significant. Shortly after the market opened at 39.31, futures contracts for September 25th were trading at 38.99, a lower level. Thus, this serves as a crucial alert. This is how it appeared on those silver futures. Now let's proceed. The draft status of Hansa Cherny once again. The US draft list of critical minerals for 2025 now includes silver, a first. According to Bob Coleman, the draft list of critical minerals for 2025 was released by the Department of the Interior, and you won't believe who's on it. Here is where he made public the list. Indeed, the silver can be seen if you scroll down. This column confirms that it is indeed a waste product of the mining process for other metals, including gold, copper, lead, and zinc. In the event of a worldwide economic downturn or catastrophe, what would happen? Everything gets slower because of them. You produce a lower volume of automobile batteries. Lead isn't used for as many products, and copper is used for much less in construction, wiring, and other uses. This is the primary source for the majority of the silver. Just as I said in my first book, which came out in 2008, and again in my most recent book, which came out in 2023, that there will be a day when everyone wants silver, but no one can use all of the byproducts, and sure enough, that day has arrived. Thus, supply decreases at the same time as demand rises. Now let's move on to elevating gold. Lastly, it is officially recognized as a critical mineral on the Department of the Interior's Draft 2025 list. Could I kindly offer my recommendation as to where it would be most suitable on their table? Plus, this is fantastic. Among the many minerals that are either important or pose a supply risk, energy is at the top of the list, followed by silver. Among them, silver is genuinely paramount. That evaluation by Make Gold Great is spot on. Before I go on, I feel compelled to mention how tiny the silver market is at the moment. Let me tell you, this is absolutely crazy. Thus, we have one Amazon valued at $2.3 trillion, the company's worth, compared to the total value of all silver ever mined, which is $2.1 trillion less than just Amazon. Now that the central bank has bought silver, businesses in the solar industry, Tesla, and anyone else dependent on the metal are beginning to see the need to lock in these reduced prices. There's always going to be a large buyer when silver prices drop. I think silver has finally found a foundation. This is incredibly significant. Additionally, it is of utmost importance for silver deliveries. In this shipment, you will find the contracts. I think there are 5,000 ounces in each. In a typical situation, this would have been the amount of contracts. The COVID era followed, during which a plethora of contracts were executed. Next month, I'd like to observe this in action, as I anticipate a significant increase in this area. Plus, I anticipate that trend to persist for the foreseeable future. We are already aware that the commodities exchange operates on a shoestring budget using essentially fractional reserve. I was keeping tabs on this earlier this year on the global silver and gold flows, and now it's all coming back to bite them. Withdrawals will outstrip inflows, and running a fractional reserve scheme can be a real pain. So, to get a better idea of what happened, let's examine some charts. Just 3 cents, or 3 pennies, below $40 was the entry day high for silver today. The date is Friday, August 29th at night. The sound of many small coqui frogs is audible in the distance. Since silver's price spike, I've been slowly putting this together. This video has been in the works for some time now. The intraday high was $39.97, and the close was $39.74, as shown in all of these tabs. So there you have it, a comprehensive overview of the bull market this century. Now all we have is this small area of fundamental and technical resistance to overcome. Since very little trading occurred there, it cannot be considered fundamental resistance. Nobody is going to sell their silver if they bought it and are still holding on to it. This is not a sales team. Permit us to magnify a portion of this. I am closing for the day. Also, the intraday was $39.97, as previously mentioned. Here we are in 2011. There is this one day here that is the most similar to that. Take a look at these candlesticks. This is an example of intraday trading, thus the thin tail. This isn't the finish. So silver was trading at a premium to its current price at some point in the past 13 years, 11 months and 10 days. On the other hand, if you examine the total number of closes, you'll see that this is the area of the candlestick that's most important for intraday analysis, not trading. This space represents 1 month, as you can see. The trading for a month is there, but you have to take out the stuff below it. This has been going on for just over a month. All things considered, the portion above the line constitutes barely a few weeks, while this portion constitutes slightly less than 1 month. As a result, there may be just 2.5 months of trading remaining during which buyers paid a premium. Perhaps a couple of them are sufficiently naive. I'll sell my silver when it reaches the price where they bought it in these areas now that I'm back to even. All right then, let's examine it. This is a fascinating topic. 24/25 indicates that we are looking at a quarterly chart, and as you can see, we executed a breakout right before the market closed. We have surpassed all of the closes from 2011. This is fascinating. This is so massive that I'll show it to you in multiple ways to make sure you understand. It is truly enormous. I began purchasing silver on April 23rd, the day I have been eagerly anticipating. Accordingly, I will return to that long-term graph. When I initially began purchasing silver, I think it was $4.30, so it's down here below $5. Well, I guess I've been waiting for 22 years or something. That's why I can't contain my excitement over these current developments. Going back to an annual chart shows that we have broken out again. As of this writing, we have reached the end of the trading day for 2011. I will go into more detail about that, but we have done another breakout. A pair of candlesticks. By limiting myself to a solid line, all of the data is derived from clothing alone, eliminating any background noise? Yes. Here we are with candlesticks once again, but today we match the 1980s opening rather than the clothing. Yeah, it's 1979. Here we are on August 29th, marking the end of the fiscal year that began on that date last year, and the process continues indefinitely. I see. So, those are tax years. So this is 1980 at its peak, but $12.50 is the low end of the close range. Here we have the up-and-coming hollow body candles, with the open end at the base and the close end at the top. So these are solid candles. The top one is the open one, and the bottom one is the close one. I spotted the enormous cup and handle a year or two ago. I can't quite put my finger on it. Here, we made a cup and handle out of gold. I kept tabs on it and everyone was thrilled. Oh my God, we are developing the handle of a cup and handle formation that has been developing over the past 45 years. It took me a while to look at a 50-year chart and realize it. Furthermore, this points to a silver price in the triple digits. That, I think, is our destination. This information is derived from the close when you draw the solid line. Here we have monthly data that has been broken down. We have reached the highest monthly close ever. Another major breakout occurs every year when we look at the data. On one of them, we have reached the highest close to date. On the other, it was quarterly rather than monthly. I apologize. Quarterly highest close in the last 2,500 years. The highest monthly close recorded in the last 2,005 years. This enormous cup and handle are visible. On the other hand, Alan and I shot a video not long ago in which Jason McNatt identifies the object in question as a beer stein, rather than a cup and handle. According to stock market closing data, $49.45 was the high for silver, and I will be celebrating when it breaks that. At $52.50, the Chicago Mercantile Exchange reached its intraday high. Because I have been waiting for this for 22 years, I intend to relax with a beer once it reaches $50, which it will and will likely do soon. I just wanted to say thanks for tuning in. Until then, take care. With an investment of up to $2,000, you can earn bonus silver on goldsilver.com. No sweat. First, select a gold-silver storage account, not an IRA, to open. The second step is to buy the precious metals. Third, have an extra 2,000 silver coins sent directly to your vault. To get your hands on some silver, drop by goldsilver.com and look for the free silver giveaway.